Hello, everyone. Can you hear me okay? I'm just doing a test here before we get started.
Yes, can hear you.
Okay, great. So I'm hoping that everyone can also use the chat box or have seen the chats pop up just so you can ask your questions in there. We don't need anyone else's video going right now. And you probably won't see my video after I stop introducing everybody either. So we'll just wait a few minutes and see if we can get everybody in the room here. Okay. Can everybody, there might be some people on the call here that can't see the screens if they're just calling in, but that's okay. We will post all of the slides that we have to our website when this is all over. I think we can probably get started. We are missing a few people, but I can add them as they join us. And I think, I'm pretty sure our two presenters are already online here. So let's get started. As long as everybody can hear me, I'm going to go ahead. You should see a chat box function. And if you are only calling in, when you do have a question at the end, I'll open it up to anybody who's only on the call who might want to answer their or ask their question, sorry, verbally, which will be fine as well, but please stay muted until that time. So I would like to say thank you and good afternoon. My name is Jennifer Ross, and I am the Member Relations Manager for the Ontario Co-operative Association. Here at OCA, we promote, develop, educate, advocate for Ontario's cooperative sector. And today's session is a special addition to a series of cooperative best practices webinars that we have planned for the year. As we all work to respond to the changes, the changing landscape that COVID-19 has produced for us, we wanted to bring you some clarity, especially around the financial side, because that's really what everyone's concerns are right now, is making it through this storm financially stable, businesses and individuals. So this webinar hopefully will address some of your concerns around that. First of our two presenters is Teresa Hibbs. She is the retail manager and coach of LIBRO Credit Union, and she's going to walk us through the individual side of the information. And then next up would be Jason Teal. He's the vice president and business banking for Meridian Credit Union, and he will provide us with information on the banking side. So after each presentation, there will be time for questions. Like I said, please put them in the chat box, and you're welcome to add them in as the presentation is going, and then we will moderate those questions at the end of each presentation. And if you are online and have a question, I will call out and open some time slot for anybody who needs to jump on verbally and ask their questions, but not until the end of each presentation. So hopefully you can see that next slide there. Just some housekeeping. We have muted everybody. And please keep it that way as long as you can, because we want to just make sure there's no background noise. If you have any questions, put them in that chat box, or feel free to jump on verbally if it's easier for you at the end of the presentations. And then this will be recorded and put up on our website at www.ontario.coop/webinars when it's all said and done. So first up, I'm going to pass the presentation over to Therese. Hopefully she's able to do that. Let me just see if I need to present her. Bear with us while we figure this all out. Let's see if we can get her up online here.
Hello, can you see my screen?
Yes, I can.
Fantastic.
Hopefully everyone else can. Please go ahead.
Thank you for inviting me to share these insights with you today. As you've heard, I'm Teresa Hibbs. I'm the retail manager with LIBRO Credit Union. I've been working in financial services for 18 years, with 6 of those years at LIBRO Credit Union, and I'm delighted to be here to share some information on the supports that are available to individuals and families as we go through the COVID crisis. I'll start with a brief introduction about LIBRO, and then I'll let you know about some of the supports that are available to individuals and families. Wrap things up by providing some insights on what questions you should ask and what to consider when working through solutions with your financial institution. At LIBRO, coaching and advice is at the core of everything we do, and a critical approach to our success in finding solutions with our members during this difficult time. After the presentation, I'd be happy to take questions, so please keep them in mind as we go along. So just a brief introduction of LIBRO. We have 36 locations serving communities across southwestern Ontario. Our purpose is to grow prosperity within Southwestern Ontario by transforming banking. And we do that by using our business as a force for good as we work to influence the top challenges and opportunities that face our region. As we're going through the presentation, you'll hear me refer to members at LIBRO as owners. So when I talk about LIBRO owners, I'm talking about people that bank with LIBRO. So here's an overview of the programs that are available from the federal government. So they're available to individuals and families that are impacted by COVID-19. The Government of Canada also has resources that provide general information and an overview of their economic response plan. Specific details and application information is available at canada.ca. So let's talk a little bit more about some of these benefits that are offered. We'll start with CERB, or the Canada Emergency Response Benefit. So this is a taxable benefit of $2,000 every 4 weeks up to 16 weeks for eligible workers who have lost their income due to COVID. The CERB is available to workers who meet all of a few conditions. You have to live in Canada and be at least 15 years old. Your work stoppage is because of COVID-19, or you're eligible for EI benefits, sickness or regular. You haven't voluntarily quit your job and your income is at least $5,000 in 2019 or in the 12 months prior to applying for the CERB benefit. There was an update to the benefit on April 15th, and that was that it allows you to earn up to $1,000 per month while you're collecting the CERB benefit. It also was extended out, so it's been extended to seasonal workers who've exhausted their EI regular benefits and are unable to undertake the regular seasonal work because of COVID-19. It's also extended to workers who've recently exhausted their EI regular benefits and are unable to find a job because of COVID-19. So more details on the program are on canada.ca. You'll also find there an online questionnaire that helps to direct you to the service option that best suits your needs. So it'll tell you whether you're eligible for CERB. So that's a really great benefit for you, canada.ca. So the next benefit I'll talk to is the Canada Child Benefit, or CCB. So families that are entitled to CCB for April 2020 and still have an eligible child in their care in May 2020 will get up to $300 extra per child as part of the regular May 2020 payment. So this is a one-time increase to the May CCB payment for the benefit year 2019-2020, and that runs from July 2019 to June 2020. So full information on this benefit and whether you qualify would be available on canada.ca. A couple of changes that CRA has made to help. The filing due date for 2019 income tax returns for individuals has been deferred until June 1st, 2020. So any new income tax balances that are due or installments are also being deferred and not payable until after August 31st, 2020, and that's without incurring any interest or penalty. As well, there is an increase to GST-HST credit amount. So if you normally receive that GST-HST credit and have filed your 2018 tax return, payments will be issued on April the 9th. If you were previously not entitled to this credit, but you filed your 2018 tax credit, you might also get a one-time credit based on your family income. So ultimately, what this increase is that the benefits have doubled. So for a single person, the benefit was $443 maximum, and now the maximum is $886 for the 2019-2020 benefit year. And for someone who's married or living common law, the maximum is going up from $580 to $1,160. So now let's talk about some other benefits that are offered by financial institutions. So let's say that you've been affected by COVID-19 and your income's been interrupted or reduced. You approach your financial institution looking for some options for help. There's a number of options available, and they're listed here on the side of the slide. Payment deferrals, skip a payment and interest-only payments are available from most financial institutions. There's also opportunities for consolidation loans, or maybe a line of credit is something that would help get you through with the day-to-day expenses while experiencing COVID. Credit card deferrals are available at most financial institutions where they're providing a payment deferral and reduced interest rate on the credit card. At LIBRO, owners that are affected by COVID could defer 6 months worth of minimum payments and have their interest rate reduced to 10.9% during that time as well. And that interest rate is about half of what the normal interest rate is. A number of institutions are also allowing GICs to be broken before their term is up. So if you need money from your GIC to get through COVID, that's something to approach your financial institution about. At LIBRO, we're offering a one-time waiver of all fees, administration or interest rate adjustment for any early redemption. And that could be a whole redemption or partial redemption for a LIBRO GIC up to $10,000. CMHC and Genworth, as well as financial institutions, are offering up to 6 months deferral on mortgage payments on a case-by-case basis. Well, what does that mean, case-by-case? Well, at LIBRO, we would ask that you call us and discuss your specific circumstance. We want to understand what's happening. We want to know how COVID has affected you. We'd be looking for information about your current employment situation. Are you laid off? Do you have an expected return to work date? We'd also want to understand whether you'd applied for any of the benefits that the government's offering, like CURB and those benefits that may help carry you through. Because a payment deferral could have a long-term effect on your financial goals, our coaches will also talk about what resources you might have available. For example, if there's a special purchase that you've been saving for, could you defer it and use those funds to carry you through COVID? So let's talk a little bit more about how a deferral works. So during the extension period with no payment, the principal balance stays the same. Interest continues to accrue, and when the payments resume, they're applied to pay off the interest first and then applied to the principal. As well, to keep on track to the original amortization that you signed your mortgage for, the time it takes you to pay your mortgage to zero, payments will need to increase on the maturity of the current mortgage term. So there's a number of questions you want to ask your financial institution when considering the deferral option. How's your mortgage impacted? What are the extra costs? Are there fees or interest associated with this? How much will the interest cost over the term of the mortgage? Or how much over the amortization or the life of the mortgage? I can tell you that at LIBRO, any fees associated with doing a deferral are waived at this time. One of the other important things is can you catch up? If being mortgage-free faster is one of your goals, the deferral could affect your timing. So will your financial institution allow you to catch up without paying a penalty? At LIBRO, we've introduced some flexible prepayment options for owners who want to catch back up after they get back to work. So they're back where they were before the deferral started. The other thing you want to find out is, are there any other options? Paying interest only on the loan would have less long-term impact, and that might be something that you would be able to manage as the interest only. Another one could be changing payment dates. If your employment is only affected for a short period of time, switching from a biweekly to a monthly payment might give you enough time to be able to make that payment. So really ask about what other options are available. One of the concerns we hear a lot of is what happens to my credit score? Will a deferral negatively affect my credit score? And what I can tell you is that if it is reported by the financial institution correctly as a deferral, it will not affect the credit score negatively. It will show as a deferred payment as opposed to a late or a missed payment. It's just important that as you're considering this, you speak with the financial institution and get the deferral approved so that it doesn't affect your credit score. Deferrals may also be offered on loans as well. Make sure to talk to your credit union or financial institution. As well, a number of auto financing organizations are offering up to 6 months deferral. At LIBRO, we look at each situation case by case and work with our owners for the best solution for them. Some other options that you could consider: would a line of credit help carry you through? With the temporary loss of employment, this may be a great solution, one that you can pay down when you're able. If you have equity available in your home, you could mortgage secure it for a lower rate. Typically, a secured line of credit would be priced at prime plus 1%, and prime today is 2.45%. A consolidation loan could reduce your monthly payments and ease your cash flow, and that might be a good thing to get you through. Again, if you have equity in your home, securing it would reduce the interest rate substantially. Mortgage secured loans at LIBRO are based on mortgage rates, and today our rates are 2.99 for a 5-year fixed. The big question is, do you qualify? So qualification rules when you're getting new lending remain the same. So if you're not earning any income, it will affect your ability to qualify for a loan. So what you want to do is be prepared to share your full financial picture with your credit union or financial institution, along with any recent income documents. They'll want to understand what's happening, where you're coming from, and to provide as much as they can in terms of a solution that will help you through. There are some government resources that are available for students. As we all know, students who were set to graduate, some will not this year. Some of them will be entering a job force that is turned upside down. And some who were expecting a job placement will come out of school and not have that placement available to them. So the government has made a number of benefits available to our students. So first of all, for student loans, all student loan borrowers will automatically have their loan repayments and interest suspended until September 30th of 2020. Students don't need to apply for this repayment pause. It applies to federal portion of student loans, and borrowers should check with their financial institution or with the provincial or territorial student loan provider to see if payments is required on those loans. There are some changes to the Canada Student Loans Program. So these are proposed changes, and we're waiting to get more specific details and when things will happen. The changes will include that the Canada Student Grant will be doubled for all eligible students. So up to $6,000 for full-time students and $3,600 for part-time students. Eligibility is also broadening for student financial assistance. So there's no expected students and spouses contributions in 2021. So those are being removed, which will broaden eligibility. The maximum weekly amount that can be provided to a student is raised from $210 to $350. And again, more details available at canada.ca. The Canada Emergency Student Benefit is a proposed solution that would provide support to students and new graduates who are not eligible for the CERB, or the Canada Emergency Response Benefit, or employment insurance, and they're unable to work due to COVID-19. So this benefit would provide $1,250 a month for eligible students, or $1,750 for eligible students with dependents or disabilities. And the benefit would be available from May to August of 2020. More details will be available soon on canada.ca. What LIBRO has done for students and recent graduates is to match what the government is doing. So students that are currently enrolled in school with a LIBRO student loan, we're waiving interest for 6 months and payments will automatically stop. For graduates that are paying off their LIBRO student loan, interest is waived for 6 months and they will continue to make their payments, but the entire payment will be applied towards the loan principal. Any students that are having trouble or need some support during COVID-19 can take advantage of a skip a payment option and just need to give us a shout to talk it through. So something to ask your credit union or financial institution is whether or not, if this applies, if you have a student loan, if there are any benefits that they're offering. There are some supports available through the government for seniors as well. So the required minimum withdrawal has been reduced for RIFs by 25%. So if someone has investments and they're concerned about the return on investments and don't want to take it out right now, the required amount is reduced by 25% for 2020. There are also some community supports that the government has contributed to. For United Way, they've contributed $9 million for local organizations to support practical services to Canadian seniors. So things like grocery delivery, medication, or other needed items, as well as personal outreach to make sure that individual needs are being taken care of and they're being connected to community supports. Another program that the government has made some changes to is the 2019-2020 New Senior Horizons for Seniors program. The stream is available. They're able to use their funding immediately to provide services specifically to seniors impacted by COVID-19. So with all of the options that are available, it's really important to review them, to understand them, understand the impact, and consider what might work best for your personal situation. You want to find a solution that works best for you and for those that are important to you. At LIBRO, coaching and advice is at the core of everything we do and a critical approach to our success in finding solutions for our owners during this difficult time. I provided during the presentation some questions to ask when working with your credit union or financial institution towards a solution to support you during this difficult time. Make sure that you rely on your coach at your credit union or financial institution. They can help guide you with the questions you should ask and considerations to make. So we've covered everything that I had on our agenda. Finally, it's important to me to end on how our approach to financial coaching is the core of everything that we do at LIBRO. It's through these challenges that LIBRO's strength comes from what we have built together. And it is that same strength, our core values, experience, community advice, and community that has prepared us to face this crisis. One day we're going to look back at this shared experience that made us stronger together. Thank you so much for joining us today and giving me the opportunity to present on behalf of LIBRO. I'd like to open it up for questions.
So does anybody have any questions? You're welcome to type them into the chat box, or if you need to unmute yourself to ask, you can as well.
So I see one question here about the CERB benefit. Do you have to apply every 4 weeks? Yes, you do have to reapply for CERB. That's a great question.
Okay. No other questions? I'm just double checking the chat here. Okay. Thank you, Therese. That was very good and covered a lot, which I think was important for everybody to be able to understand the type of questions that they need to be asking. And like I said, the presentation, hopefully, if you will share it, will be up on our website so people can refer back to it.
Thank you, my pleasure.
Okay, so next I will see if I can bring in our other participant. Not sure how to unmake Teresa host here. Sorry, bear with me, everyone.
Jennifer, we can see your screen now.
But it still says that you're the host, and I'm not sure how to change that. I apologize.
Would you, do you want me to end and come back in?
I think I was able to do that.
Perfect.
So now I just need to find our other presenter, which I believe. Jason, is that you?
Yes, Jennifer, can you hear me?
I can, yes. Just let me get up your presentation here. Okay, can everyone see Jason's presentation now on the screen? If you could just chat it to me in the box, that would be great. Yes, okay, great, wonderful. So Jason, please go ahead.
Thank you very much, Jennifer. Hi, everyone. I'm Jason Teal. I'm Vice President of Business Banking at Meridian Credit Union. By way of background, I have close to 20 years in commercial and business banking, including the last 14 with Meridian. First, I would like to thank Aaron Morgan and Jennifer Ross and the entire OCA team for inviting me to speak today. As well, I would like to thank all of the participants from the various cooperatives on the phone from across the province. Just very briefly on Meridian, for those that aren't familiar, we are Ontario's largest credit union, helping over 250,000 members in Ontario. We have more than 75 years of banking history as a credit union and is 100% owned by our members. Our members are served by 1,900 employees and over 90 branches, 14 business banking centers, our contact center and corporate offices in various communities across the province. So it's safe to say, and we've been saying it a lot and you hear it all the time, but we are definitely living an unprecedented health crisis, at least in our lifetime, which has caused a significant economic challenge for individuals, businesses, and governments. This has produced a considerable amount of stress in all facets of business, in particular the smaller and medium-sized organizations in Ontario, which often do not have the same access to capital as large national or multinational corporations do. So these challenges, of course, apply to cooperatives, some of the other businesses with different ownership structures. So today I would like to discuss with all of you various options that are available for cooperatives on the business side to assist during this challenging environment. So I'll go to the agenda slide, the next slide. So today we want to, oh, sorry, I can't see it, so okay, I assume you moved on. So the agenda today is resources available to assist through COVID-19, government program overview, and tips on how to engage your credit union. So we'll go to slide number 3. So the resources available, there's certainly a theme emerging of shared solutions where many people, resources are contributing to helping to provide a positive outcome for an organization. These can be broadly separated into the following categories. So firstly, I'd like to touch on payment deferrals. So Meridian, similar to other credit unions and banks, have been working with our commercial and business members directly on various payment relief options. Similar to what Therese addressed on the personal side, these are assessed on a case-by-case basis, and we've been offering up to 3 months of principal payment deferral or principal and interest deferral as a source of assistance to help our members with short-term cash flow challenges. Focus, of course, has been to assist our members who have been impacted most severely. As well, government programs, which I've listed several there. Governments have responded to COVID-19 with a variety of support programs. I will be going through these in more detail in a few minutes, so we'll leave these for now. And thirdly, with the shared solutions theme I just mentioned, there are other options with different stakeholders. For example, before the just launched Ontario, Canada Emergency Commercial Rent Assistance Program, tenants were already discussing options with landlords. Other stakeholders as well, including insurers, merchant service providers, and other suppliers, are examples that we have heard from our business members. So we certainly encourage all our business members to look deeper within their organization to explore options that might not be as obvious as the government relief programs. So I'll go to the next slide, and I'd like to first discuss the Canadian Emergency Business Account, or CEBA program. This was quicker to market than most, and there has been a fair bit of press on this program. It is a $25 billion program through the Export Development Bank that provides up to $40,000 to small and medium-sized businesses and not-for-profits to help them cover their operating costs where their revenues have been temporarily reduced. Would like to point out that this application does not have to go through normal credit adjudication process at a credit union or bank. To qualify, the business has to demonstrate that they have paid between $20,000 and $1.5 million in total payroll in 2019. I would like to note that this is up from the original parameters of $50,000 to $1 million. So the government has recently expanded this program. Some real benefits for this program is that the loan has no carrying costs initially, with 0% interest until December 31st, 2022, and then it converts to a 3-year loan at 5%. Another key benefit is up to 25% loan forgiveness, or $10,000 if you have $40,000 outstanding. If it's fully repaid by December 31st, 2022, based on the outstanding amount at January 1st, 2021. At Meridian and many other financial institutions, we developed a fully digital application for our members, which was necessary just based on the pure volume of organizations that have been applying for this, and allow us to process several thousand of these within the first few weeks. And members have been receiving their $40,000 within a week or so of their application. So that's the CEBA program. Next, I go to the next slide 5, and I'd like to touch on the Business Credit Availability Program, or the EDC program. So this is really a program to address short-term liquidity. There is no minimum size. These go through standard adjudication processes at a financial institution. It's an operating line or cash flow term loan. The difference here is, and the government or EDC opened this up so you don't have to be export-related organization, but they'll guarantee up to 80% of the loan for the first year with an option for a 1-year renewal. If the loan is, and then there's a bullet payment that the loan is to be repaid then, or it's to be extended out, but the EDC guarantee falls away at that point. Benefit is it's interest only during this initial term. Standard interest rates apply, and there's a fee of 1.8% payable to EDC, but that can also be deferred for 6 months. I'd like to touch on the next one on slide 6, the Business Credit Availability Program, but BDC, so the Business Development Bank of Canada. This program was set up to address longer term needs. It's a co-lending arrangement. So participation is 80% with BDC, 20% with the credit union. Although to the organization, it would just feel like a loan from a credit union, but that's how it's managed behind the scenes. There is no minimum size with this program. It does once again go through normal adjudication process. It's just for the credit union, it's backstop with 80% guarantee. And the maximum loan amount, you'll see there's three different depending on criteria. Either less than $1 million in revenue, between 1 and 50, and 50 million or more. Your loans, as I mentioned earlier, are longer term, so up to a 10-year term and 20-year amortization on an exception basis. It really depends on what the purpose of the loan is and how it may be secured. Although in this case, a lot of it is already secured with BDC. Interest only during the first year, monthly principal and interest thereafter. And it is, like I mentioned, it went through regular adjudication process, so there is standard loans and fees apply. And really they're just shared between BDC and the credit union, proportionate to the co-lending arrangement. So that covers off long-term. And all three of those programs would be accessed through your credit union or financial institution. Next, I'd like to touch on slide number 7. Several programs that are available for organizations more directly with the government versus through your financial institution, but they're certainly worthwhile to be aware of. First one is the work sharing program. So this is an adjustment program designed to help employers and employees avoid layoffs when there is temporary reduction in the normal level of business activity that is beyond the control of the employer. So this work sharing is a 3-party agreement involving employers, employees, and the government. Agreement length has to be at least 6 consecutive weeks and can last up to 26. There are special provisions in COVID-19 to potentially extend that further. And work must be reduced by 10 to 60%. To be eligible, must be a year-round business in Canada for at least 1 year. Be private business or publicly held company, have at least 2 employees as part of the work sharing program. And eligibility was extended to include not-for-profit employers experiencing a shortage of work due to a reduction of business activity and or reduction in revenue levels due to COVID-19. Second, on there, I've highlighted the Canadian Emergency Wage Subsidy. So this is eligible for small employers, will receive 75% of remuneration for the first $58,700 of a normal salary, or to the max of $847 per week per employee. This subsidy is available for the 12-week period from March 15th to June 6, 2020. Eligibility includes corporations, inclusive of nonprofit organizations and charities that have suffered a 30% or more decline in gross revenues, with consideration for 15% for March because the impact was less compared to the same month in 2019. So any public institutions are now not eligible. And the subsidy will be administered as a reduction in employer source deduction. I'd like to go to slide number 8, which is the Ontario, and discuss the Ontario Canada Emergency Commercial Rent Assistance Program. This program was just recently released, and it's the Ontario government is committing $241 million to partner with the federal government and deliver more than $900 million in urgent relief to small businesses and their landlords through this program. This program will provide forgivable loans to eligible commercial property owners experiencing potential rent shortfall because their small business tenants have been heavily impacted by the COVID-19 crisis. The program has been developed to share costs between small business tenants and landlords. Small business tenants and landlords would each be asked to pay 25% of the before-profit cost, and the provincial and federal government would share the remaining 50%. So to receive the loan, property owners must be required to reduce the rental costs of small business tenants from April to June of this year by at least 75%. The loan would also be contingent on the signing of a rent forgiveness agreement between impacted tenants and landlords. This would also include a moratorium of evictions for 3 months. Commercial properties with a residential component, but where the residential mixed-use properties have at least 30% commercial component, would still be eligible. And an eligible small business to qualify here is one that pays monthly rent not exceeding $50,000 in gross rent payments. So that covers a large number of businesses and is a non-essential small business that is temporarily closed or is experiencing a 70% drop in COVID-19 revenues. And that's determined by comparing revenues in April, May, and June from the same month in 19 or compared to average revenues in January and February. So once again, this one is really focused on small businesses that have been severely impacted with over 70%. And this program is administered by the Canadian Mortgage Housing Corporation. So that's the extent of the discussion I'm providing on the government relief options. I'd like to go to slide number 9. And I thought it might be helpful just to discuss how to engage your credit union, tips to dealing with your banker or financial advisor. So key things to consider and what your lender is looking for. So going full circle on the multi-stakeholder approach that we touched on earlier, really it's an opportunity, and tying into the second bullet, to be proactive and well organized, to explore all options that are available, whether that's government, with your suppliers, with your employees, and with your landlord, your credit union or financial institution, and government programs. Be prepared and well organized. Certainly will help your lender better understand your financial situation and determine the best course of action to assist you. Upfront and transparent is important. Surprises are to be avoided whenever possible, and certainly ones where the borrower has knowledge in advance. This will not only help in the short term, but will ensure credibility as the market normalizes over the coming months and year. One thing that's important to prepare is COVID-19 financial forecasts. Forecasts prepared for this fiscal year, if your business has been impacted, may not be applicable anymore. When you're creating those, you should really look at multiple cases, best case scenario, medium case, and worst case, and being realistic the best way you can. Certainly realistic shows that you have a strong understanding of the current situation and the multiple forecasts given the still uncertainty of when things will open up. As well, really, if you go a little deeper, besides the obvious hit to revenue for many businesses have been impacted, there's some other risks there that should be considered. That's changes to your organization or business and impact, both on your customers, employees, technology, and supply chain. So coming prepared and highlighting what these changes and risks are and how they're being addressed will be important to have available for your financial advisor or banker at your credit union or financial institution. So with that concludes my formal comments, and I will turn it back to Jennifer.
Okay, thank you very much. Again, lots of information, but it's nice to see it all in one place. I think it helps people really get a good picture of what their options are. Does anybody have any questions through the chat box? I'm not seeing anything. I'm not sure if you're messaging directly, but it would need to come to me or to everyone for me to be able to see it. I can also unmute for a moment in case there's anybody on the line that has any questions.
You are unmuted.
Whoa. Didn't work out. Any questions from anybody on the line? Okay, hearing none and not seeing any in the chat box, I guess that means you've done a very good job of giving us all the information that we ever had questions about. Let me just see, because I think I muted you. Unmute. There you go. So thank you very much. I don't see any questions, like I said. Oh, wait, there might be one. Hold on. Okay, so it says CEBA. Is it eligible to business started in 2019 or less? Started in 2020?
Okay, so for the CEBA program, it has to be a registered business as of March 1st, 2020.
Okay.
So the answer, if that was formed in 19, the answer should be yes. Once again, it has to be through your primary financial institution. You can only apply once. There's an attestation to that. So, but based on the information provided, Jennifer, that appears that would qualify, and recommend you reach out to your primary financial institution to discuss further.
Okay, great. And then the other question is there anything specific for housing co-ops?
So, I mean, the commercial rent program just came out last week. So I had a team here do some research for this, and we haven't come across anything specific to that. That doesn't mean there's not something in the works, and there may not be, I'm not sure, but we haven't seen that, no.
Okay. Work share program. Does the business have to be a business for 1 year?
So, and once again, these are programs that we don't deal with directly, but I mean, I can tell you that it has to be a year-round business in Canada for at least 1 year.
Okay.
So if that answers the question, is yes.
Okay. I think that same person said that they started in January 2020, so maybe not qualifying on that.
I would suggest no. The only thing I would say there, Jennifer, is these programs are evolving and changing, so and generally expanding at this point still. So I would keep an eye on that, even if not now. I would keep referring to that for potential changes to that program, because others have changed over the last 2 to 3 weeks.
Okay. And another question is, can nonprofit housing providers apply for CEWS? I don't remember which one that was, but.
So that is the Canadian Emergency Wage Subsidy. And sorry, what was the question?
If nonprofit housing providers, so the staff, I guess, that are working in the nonprofit houses, housing co-ops or nonprofit housing.
So I'm, oh, sorry, CEWS. So it's inclusive of not-profit organizations and charities. The one caveat is it has to suffer more than 30% or more in decline in gross revenue.
Okay.
And it's for the 3 months. So so the answer is likely, without knowing the specific, but the answer is likely yes, subject to that other criteria of declining revenue.
Okay, great. So seeing no further questions, and making sure that nobody else has any more questions, I want to thank both Therese and Jason for giving us this great overview. I will be posting the session online and the slides so everybody can have access to that information. If you do have any more questions for either Jason or Therese or us at the Ontario Co-operative Association and how we can assist you, please feel free to reach out to myself, And I think that concludes our session for today. So thank you very much, everyone.
Thank you.
Thank you.